I'm Jeff Saylor, and welcome to this edition of Financial Reporting Considerations, a series designed to keep you up to date with current events in accounting reporting. In this edition, we'll look at the impact of the COVID-19 virus on your consideration of subsequent events. The topic of subsequent events can be found in the FASB Codification Section 855. And by definition, subsequent events are events or transactions that occur after the balance sheet date, but before financial statements are issued or available to be issued. Now, there's two types of subsequent events out there. Those which provide evidence about conditions that existed at the balance sheet date. That's number one. And these are what we call recognized subsequent events. They actually have happened. The second type is those which provide evidence about conditions that did not exist at the balance sheet date. And these are known as non-recognized subsequent events. In other words, they didn't happen back then, but we're kind of interested in them now. Now, while there is uncertainty as to when the virus first appeared, the impact in the U.S. was, I would dare say, in 2020. Thus, there was a strong argument that the conditions did not exist at the balance sheet date for 12/31/19 reporting. But clearly, there is evidence that arose after that date. So as a result, the occurrence of the coronavirus will most likely result in what we will call a type 2, a non-recognized subsequent event. Now, this will also integrate with the required disclosures for risks and uncertainties, so you'll want to keep that in mind as you look at these things. The key here is to prevent the financial statements from being misleading. We always want to tell a true story. Those of you that have been to my seminars know I love to harp on that. We're trying to tell a true story about what's going on, and that ties right in with this. We cannot be misleading. Now, some of you out there said, hey, I don't do GAAP. What about special purpose frameworks, income tax basis, or modified cash? Well, the guidelines would still apply. Why? Because the reporting standards, that would be compilations, reviews, and audits, require disclosures similar to those required by GAAP. And realistically, why wouldn't you want to do that? All right, well, what about statements that omit disclosures? Well, technically speaking, there is no requirement. But keep in mind, the overall responsibility is not to release financial statements which may be misleading. Now, what are some examples of potential impact from the virus on your financial statements? Well, you could have reduced revenue. I know several clients that are experiencing that right now, and tied in with that would be reduced cash flows, business disruptions. I have many restaurant clients. They're not open right now. Supply disruptions, production delays. How about customer dissatisfaction? There could be employee claims. And perhaps there could be even breach of contract lawsuits. So all kinds of things you could be considering. So what disclosures are required for non-recognized subsequent events? Two things. Number one, the nature of the event. Well, clearly, that's this virus going on. And secondly, an estimate of the effect, or the easy way out is a statement that an estimate cannot be made. Okay, let's quickly take a look at a couple of example disclosures. The recent outbreak of the COVID-19 virus has resulted in reduced staffing at many of our customers. As a result, we've seen a slower collection rate on our accounts receivable. Depending on how long this condition continues, the company may need to draw on its line of credit to finance general cash flows. The overall impact of this cannot be estimated at this time. Here's another one. With the recent outbreak of the COVID-19 virus, the government has advised that our business close our doors to traffic until they deem it safe for us to reopen. Operations have effectively ceased, and the company has had to lay off the employees. The company has worked to reduce the other expenses during the time of closure as well. The employees have expressed interest in returning to work following the mandated break, and the company has sufficient cash flow to reopen, provided it is allowed in a reasonable time. However, the impact on earnings cannot be estimated. So those are some basic thoughts about subsequent events with this current issue we're all facing. I certainly hope that you found the information helpful and that you, your family, and friends stay healthy and happy in these difficult times. Thanks for watching.